Hi, my name is Chaitra Babu, and today I'm going to present to you an equity research presentation on limited brands. In this presentation, I basically cover the highlights, the qualitative analysis, and the quantitative analysis. I do a little bit of risk analysis, and then I give a recommendation as per the calculations and the estimations. Highlights. The firm is relatively well positioned for further success in a recessionary environment given its core customer base and the high emotional content of intimate apparel. At Limited Brands, they are committed to create a diverse organization and an inclusive culture of primates on everything they do. Limited Brands contracts with manufacturers throughout the world to make the merchandise. Vendors are selected based on their ability and commitment to meet the safety and quality standards as well as follow a strict ethical labor and environmental standards. Limited Brands is a value-based company. Brand value of Limited Brands is high and mainly due to Pink and Victoria's Secret. We acknowledge our responsibility to deliver in this promise by providing high quality, safe and effective products in all of our brands including Victoria's Secret and Bath and Body Works. There is a substantial international growth opportunities for Limited Brands via flagships, franchisee models and e-commerce. They are expecting continued inventory management and improved merchandise margins, although sourcing costs should escalate in fiscal year 2012 with higher cotton prices. The significant increase in the earnings and the continued disciplined management of inventory, capital spending, and the capital structure has resulted in a very strong cash and liquidity position. Here is the financial summary, which basically gives you an overview of the market capitalization, cash, annual revenue, operating cash flow, dividend rate per share, EPS. My justification for hold. Total return is expected to closely approximate the total return of a relevant benchmark over the coming 12 months, with shares generally rising in price on an absolute basis. Qualitative analysis. This basically comprises of the company profile and the industry overview. Limited Brands is a specialty retailer that conducts its business in two primary segments. Victoria's Secret, a women's intimate apparel, personal care products and accessories retail brand, and Bath and Body Works, a personal care and home fragrance products retail brand. Founded in 1963 in Columbus, Ohio, Limited Brands has evolved from an apparel-based specialty retailer to a nearly 10 billion company focused on lingerie, beauty, and personal care that makes customers feel sophisticated and forever young. Victoria's Secret, also known as VS, is the leading specialty retailer of women's intimate apparel and beauty products, with fiscal year 2010 January sales of 5.3 billion, which includes about 1.4 billion at Victoria's Secret Direct, a catalog and e-commerce retailer of women's intimate and other apparel and beauty products, with 4.2 million at La Senza. Industry overview. The fundamental outlook of apparel retailers is neutral. Apparel sales are expected to be up about 4% in the specialty channel of 2010, reflecting year-end momentum offset by store closures and erratic consumer spending through most of the year. The mature and fragmented US women's apparel market, Limited Brands has generated about 104 billion at retail in 2009, according to the NPD Fashion World Consumer Estimated data. Industry environment Potter's five forces. Supplier power. The supplier has the power to increase its potential by bringing down the apparel prices and drawing more customers. The brand value for the Limited Brands no doubt exists for a strategy To reduce the price on the commodities bought to make the apparel is the best way to gain more customers' attention. Buyer power. Buyers are the strongest and the most important part of any industry as they have the power to make the choice to buy or not to buy an apparel. The buyer can categorize apparel by their quality, brand name, or price range. He or she has the power to change their mind and not buy products from the store. The greatest buying power is the offer to large sales discounts. Competitive rivalry. Rivalry among competing firms is most powerful in the five competitive forces. The ongoing war between the firms competing in the same industry for gaining customer share to increase revenues and profits. The competition is more intense if firm pursues strategies that gives competitive advantage over the strategies pursued by rivals. Threat of substitution. Limited Brands faces its greatest threat in the apparel industry and its differentiation. The apparel industry has multiple companies that are creating clothes for the same market as the Limited and the Express. The Limited Brands must figure out how to differentiate its product lines from its organizations. Threat of new entry. Threat of new entrant is very low as they have to deal with brand names like Victoria's Secret and Bath and Body Works. Overtaking these stores is not an easy task, and also these stores have earned many loyal and satisfied customers since the last couple of years and seasonal vacations. Technical analysis. This chart shows the price and volume for Limited Brands from March 2010 to present. Here you can see a sharp spike in the month of May 2010 and also a drastic dip in the price value, and has been in a constant rate of increase since September 2010. You can also see that the volume has few temporary shot up spikes in the period of November 2010 to December 2010. Financial analysis. Financial analysis basically comprises of short-term solvency or liquidity ratios, long-term solvency or financial leverage ratios, asset utilization or turnover ratios, profitability ratios, and market value ratios. Now these aspects are basically discussed in the next slides, in the following slides, individually that is. Short-term solvency or liquidity ratios. LTD has a current ratio of 2.45, which shows that the company's ability to repay all its short-term liabilities. It is in better position when compared to the other companies in the market as far as the liquidity is concerned. One of the most conservative methods to calculate the company's liquidity position is quick ratio method, and even its method gives a positive result of 1.67, proving once again the company's liquidity position. As shown in the above table, the cash ratio against the current liabilities is 1.36 times. This means that the company does not have to rely on the sale of its inventory to pay back its short-term investors. This clearly tells the investors where the company stands as far as its readiness to pay now is concerned. Long-term solvency or financial leverage ratios. As the total debt ratio is lesser than 1, it is a good sign for the company, showing that the company has more assets than its debts. The debt equity ratio and the equity multiplier ratio is 2.28 and 3.28 respectively. This means the company has highly dependent on the debts to finance its assets, and this in turn will increase the earnings of the company. The disadvantage of the company is that it will have to bear a very high interest expense. Asset utilization or turnover ratios. Asset utilization or turnover ratios basically summarizes the asset utilization ratios for Limited Brands based on the fiscal year ending January 30th, 2010. These ratios are measures of turnover Ltd has high day sale in inventory, which shows that the firm generates efficient sales and collects cash. The firm's receivable turnover is nearly doubt that the industry average, indicating that the company is more efficient in collecting receivables than its competitors. The total asset turnover also indicates that the firm is making good use of its assets. Profitability ratios. Profitability ratios measure efficiency of assets and also operations. 5.19% means that they generate about $0.05 profit per dollar of sales, which is low. The ROE of 21.52% is pretty high, which indicates that the company is profitable enough. Market value ratios. This table summarizes the market value ratios for Ltd based on their fiscal year January 2010. Financial statements preparation date also indicate that it is taken from the year 2010. These ratios concern the stock price and value of the company. The values indicate that the stock might be overpriced based on their industry averages. ROE using the extended dew point analysis for Ltd. Basically, ROE is calculated here, which is coming up to 20.51%. Revenue growth and common size values. This table shows that the earnings per share is not fluctuated and the company has maintained their dividends. The 2009 recession didn't affect the company's dividend value as well. This shows the stabilization of the company and also has not affected the shareholders. The 2010 earnings per share has also increased after the drop in 2009. Expectations for fiscal year 2011 determined from the historical data. This table shows the increase in the EPS, which is why I recommend hold on the shares. The increase in EPS means that there is an increase in dividend. So with the increase in return on investment, it is in favor of the investors in 2011 and also 2012. So I would stand by my recommendation of hold. The risk. I would suggest hold. The risk assessment reflects Ltd's strong cash flow offset by execution risk in an increasingly competitive marketplace. EPS values show that the increase in the EPS, which is why I recommend hold on the shares. The increase in EPS means that there is an increase in dividend. So with the increase in the return on investment, it is in favor of the investors in 2011 and also in 2012. The values and scales of apparel sales will go up for 2011 through most of the year. For the third quarter of fiscal year 2011, Ltd announced earnings per share of 18 cents, representing 9% of the total annual estimate. Now this brings to the end of my presentation. Thank you.